Well, hello, everyone. Welcome to Everything Money 24/7. We have a few things to discuss today. The U.S. added 911,000 fewer jobs in the year ended in March. The last time it was this large was in 2000, right before the recession. Now, again, this is not to say that a recession is imminent or going to happen, but clearly there has been a slowdown in the economy. Clearly, there are far fewer jobs. If you look right here, we're sitting here looking at this. And one thing, the leisure and hospitality sector, which includes businesses such as restaurants and hotels, likely had 1.1% fewer jobs in March than the official data showed. That's an incredible, that's a place that people, when they're feeling tight, are not going to spend as much money. This is the largest preliminary revision on record going back to 2000. When measured by percentage of total jobs lost, the revision represents the largest since 2009 during the financial crisis. Guys, again, your job as an investor is to not sit there and make decisions because of this. I don't want you selling in and out of things, just going, oh, the economy's going to hit. You can't time these things. But what you can do is be aware and be ready. What is happening here? What is going to happen? We've seen an increase in delinquencies on car loans, credit cards, and mortgages. These are important things that people have. I can understand the credit cards, but when you're not paying your car, your mortgage, things are tight. And when we saw all those credit cards stacking up as inflation was going higher, it's not rocket science to see what's going to happen next. Now, it doesn't mean things are bad. It just means this is something to pay attention to. And the future, imminent future, might be a little harder. But remember, if you're a value-driven, principle-driven investor, you're going to look at these times for opportunity. That's what's really important to understand here. These are the times for opportunity. What else is in this? Of course, the White House says the benchmark revisions make clear that the president inherited an even weaker economy than thought. I agree with that. It's so funny to see that because they're already preparing I voted for Trump, but I also laugh at 85% of the things he says. But that is true. So if you think that this is based on just March, he went into office end of January. So we're talking about 2 months here where the revision was there out of the 12 months. But we've been talking about this for a while, that there have been some weaknesses in the economy over time. Okay, now, Oracle. Guys, look at Oracle. It's up 41% today. Larry Ellison, if this ends, will be the richest person in the world. 41% increase in one day for a company that's now worth almost $1 trillion. That's an incredible jump. But here's what's even crazier. They missed on earnings and revenue. They reported $1.47 in earnings versus $1.48 expected, and they reported $14.93 billion in revenue versus $15.04 billion expected. It was still a 12% increase in revenue, but that's what I'm sitting here looking at. Now, what happened? Oracle said Tuesday that its remaining performance obligations, a measure of contracted revenue, like money, revenue that's on contract, increased to $455 billion from up 359% from a year earlier. That's why it's surging. OpenAI signed an agreement with Oracle to develop 4.5 gigawatts of U.S. data center capacity. That's incredible. Wow. Incredible. They're up a ton this year now. Year to date, up 105%, 106% after including today. That's an incredible number, guys. Let's see. Let's go back to Oracle here. Insane. The question is it worth it? Now, here's what's interesting about Oracle. Their profit's actually a lot lower than Microsoft, which is a software business, even though they have a higher gross margin. So their gross margin is 70%. Microsoft is 68%, so pretty close. But Microsoft's profit's 35%. Oracle's bottom line profit is 21%. That's a big difference. Big difference. So, free cash flow last year, negative. What is going on here? That's incredible. They spent a lot of money, obviously, on capital improvements. Capital expenditures, look at their capital expenditures skyrocketed. 1.5 billion, 2.13, 4.5, 8.7, 6.7, $21 billion. But here's what I want you to focus on. Look at their cash from operations. it also skyrocketed. 13, 16, 9.5, 17, 19, 20.8. Big jump. Wow. Big time money. Analysts think this company is just, oh, wow, over doubling from here until 2030. Revenue doubling again. So what's this company worth to us? Let's pull it up in our stock analyzer tool. Have I ever done Oracle? I have. Let's see. I did a 10-year analysis, 5, 8, 11% revenue growth. Does analysts agree with me? They do not. They think I'm being too conservative. Okay. I did 20, 22, and 24% profit margin and free cash flow, 17, 20, and 23 on the PE, and a 9% return. So let's go a little bit higher, 8, 11, and 14% revenue growth. Hit the analyze button. Stock's at 340 right now. I have a low price of 100, high price of 230, middle price of 150. So what does revenue have to grow to be worth it? I'm not going to change that. I just look at this saying probably, and by the way, it makes sense. A company up 41% in one day this big, probably hard to find value in that. It's probably hard to find value in that. That's the issue we have there. All right. That's what's really, really important to understand and look at. Guys, another thing I want to talk about today. Let's look at GameStop. GameStop coming in hot. GameStop has really crushed it. Big profit numbers. Let's look at this article from fifth straight quarter of profit. Look at this. They reported sales of $972 million, up 22% from $800 million the year before. Earnings of $169 million, up from 14.8. Now that did include Bitcoin and all that stuff. If you take out Bitcoin gains, because remember nowadays when something they own goes up in value, they have to report it. It was a lot lower, but it wasn't like, I think it was into 130 million from 170 million. That's incredible, guys. GameStop has turned themselves around because they partnered with the Collectors Holdings or whatever company that was to start selling Pokemon and PSA rated. And now they're allowing people to come into their stores and get their cards rated. They said they've done over 1 million of those so far, which is incredible. Talk about a turnaround for a company. They changed how they're doing business now. I love it. They took that meme coin idea, that meme stock idea, and said, how are we going to make this a legitimate company? They took the cash. Look at the stock price. Remember when it went to $50-some a share? Now it's 25. Let's look it up in our software. GME. Company is $12 billion market cap, enterprise value of $8.5 billion, which means they have far more cash on hand than debt. That's incredible. Let's go look at that balance sheet. They have $7 billion in current assets, $6.4 billion in cash against total life. Oh my God, it's incredible. Are they going to turn this bad boy around? Wow. Wow. Awesome. Good for them. I want to go see what their GameStop earnings release. Let's go see what their free cash flow was. Investor relations. Let's go to free. Okay. Free cash flow. 113 million last quarter. 113 million. That's about right. Last year they did 433. Okay. Wow. But look at the 26 weeks. 303 million. That's half the year. Good for them. Ryan Cohen, that CEO, took over and really turned them around. So guys, these are the things to look at. Now, don't bank on turnarounds when you're doing these things, but is GameStop a new business now that needs to be paid attention to? You know, Pokemon cards, these baseball cards, these collectibles are really surging in popularity. If this continues on, this company is going to do a great job, especially with how much cash they have on hand. So guys, thank you very much. Check out our software. If you like what I'm doing here in the software, we have a 7-day trial, but it's very important. You get the software, you get all of these tools. Most importantly, you get the community of like-minded investors, but we don't want people who are just trying to chase hype. If you're a real investor trying to learn and get better, trying to up your investing game, join the community. $7 for 7 days is our trial. Go check it out, everythingmoney.com. Thank you for your time. Take care.